Good evening, investors, and thanks for tuning into the forecast. I'm Jake Ackerman. A positive first week of January. And as the old saying goes, as January goes, so goes the year. With a first 5 trading sessions of January, according to the Stock Traders Almanac, over the last 47 years, the first 5 days, up or down, it has had an accuracy of 83%. Now, with a positive first week of January, that's a lot of positive momentum going into the trading year. Now, we had a really important data point Friday morning. That was the jobs numbers. The Fed has been talking about jobs numbers. They're wanting to see job numbers start to decrease, unemployment start to go up, and that's the confirmation that they've had a handle on inflation. Well, data numbers dropped this morning, and jobs came in hotter than expected by about 23,000 jobs, and yet the market went up. Unemployment came in lower than expected, and again, it didn't have the effect that a lot of Wall Street analysts were anticipating. Why is that? I tell you why. Average hourly earnings. Average hourly earnings, you would expect with jobs going up, average hourly earnings would go up because there's increased demand for jobs. Well, average hourly earnings went down, and that's because employers are maybe holding on and hiring new employees, but they're not providing these big bonus incentives, big pay raises, and that's because the Fed has changed the psychology of a lot of business owners thinking that, hey, we're probably going to go into recession in 2023. Yeah, retain your employees, but you better watch your spending. And I think that business owners have received that loud and clear. So average hourly earnings came down a little bit, showing that maybe the Fed doesn't need job losses, unemployment to pause if wages coming down. The reason they're looking for job losses is because they're afraid of a wage price spiral, blowing inflation out, and then we're combating a significant enemy of inflation. Wage price spiral was something that we've seen in the 70s, and it was out of control. So with that being taken off the table, it's back to just fighting inflation. Now, one thing that I was talking about going into the end of the year was the bond market. The bond market investors have been calling this an entire downturn in 2022 correctly. They were selling into the stock market rallies. The stock was leading, the bonds were selling off. Well, the bond market was leading on which way or the other. So the bonds started going up, the stocks followed, bonds would start coming down, stocks would follow later. The leading indicator that was correct in 2022, the bond market. Is that going to change in 2023? I don't think so. What is the bond market doing right now? The bond market is going up. The stocks have been selling off. The bond market has been leading stocks. Some of the best investors in the world are in the bond market. We need to watch the bond market closely. Rates have been coming down. The bond market has been going up. What else is happening? Energy prices have continued their downtrend, down over 7% for the week. The first 5 days, down 7%. We've seen a downtrend in energy prices since June, down significantly. I believe the high was roughly around high 130s, 140. Now we're trading in the 70s per barrel. Again, deflationary pressures. But the Fed says, hey, we need, in their FOMC minutes on Wednesday, they need further confirmation. Average hourly earnings going down this week, that's a check. Last couple inflation reports came in lower than expected. That's another check in the inflation's coming down box. Next week, Thursday, we have our core and CPI numbers, the Consumer Price Index. That is going to be the fulfillment and confirmation if inflation really is on its way down and being defeated, especially with December. December is the time that people go out and spend, buy Christmas presents, Hanukkah, Kwanzaa, holiday gifts, not Christmas gifts, holiday gifts. So we'll see what the inflation numbers. The expectations are really high in a sense of they're believing inflation is going to come in really low. So we have high expectations that inflation's coming down. So let's see if we defeat that. If we come in as expected, better than expected, I believe this trend of a positive January is going to continue. We have hotter than expected CPI numbers. That throws a wrench in our plan. Our timeline's changed. But as of right now, we are feeling pretty positive with the markets with a good first week. That's a good omen. Let's see how the rest of January plays out. And I think with those CPI numbers, I think we're going to find out what January is going to bring to us. So tune in next week, and we will talk about CPI numbers. Our session is going to be on Thursday, so we'll talk right after they're released. Ackerman Financial Group, expertise you deserve, experience you can count on.